Good morning, ladies and gentlemen. This is Alex, Senior Account Executive at GDMFX with today's European Session Outlook. We had a big day in trading yesterday with Mario Draghi's speech causing huge movements all around the markets. We'll start with the North American markets. We had the initial and continuing jobless claims. Initial 6,000 better than expected, continuing 18,000 better than expected. Chicago Fed National Activity Index 0.02 less than previous. Housing Price Index month-on-month 0.2% less than previous. CB Leading Indicator month-on-month 0.2% worse than expected. And retail sales ex autos in Canada 0.1% worse than expected. The reason we saw the movements all across the US stocks and currency pairs was mainly due to the speech held by Mario Draghi. I'll hint on that later. A rise in the dollar and a rally in stocks isn't typical, especially since a stronger greenback has proved a headwind to company revenues, but the idea of more dovish actions by the Fed, which will convene for its two-day policy meeting next week, may explain the rally. Signs that the US Central Bank may hold off on lifting rates for the first time in nearly a decade has bolstered appetite for risky assets like stocks in an ultra-low interest rate environment. Dow Jones posted 41 points up movement, Nasdaq 172 points up, Dixie up to 96.33 from 95.03, and the biggest movers were the USD Swiss franc, 140 pips up, USD JPY 100 pips up. Today's news is mainly from Canada. Tier 1, we have CPI Data. And then from the US, we have Tier 2 Market Manufacturing PMI for October. All right, on to the EU markets. The most important event yesterday was European Union's interest rate decision, which remained unchanged, and Mario Draghi's speech, which followed. Hardly anyone expected the European Central Bank president to deliver more stimulus yesterday, as policymakers met in Malta, and he didn't, but he still managed to offer up much more than market participants had expected, dropping the biggest hint possible that more action is likely on the way when policymakers next gather on December 3rd. Mario Draghi hints more stimulus to come. Here are the main takeaways. The ECB will re-examine its stimulus program in December. Re-examine was the word ECB watchers were listening for, taking it as a clue that policymakers would look at either expanding the size of its 60 billion euro a month asset buying program or extend its duration past its September 2016 end date, or both. If that wasn't enough, Draghi emphasized that the asset buying program offered a lot of flexibility, further driving home that policymakers have plenty of ways to tweak it. Finally, he made it clear that even the already negative deposit rate was in play. It could be cut further, a move the ECB had appeared to previously rule out. Lowering the deposit rate would effectively increase the number of bonds eligible to be purchased by the ECB. And here are the movements after yesterday's speech. DAX 460 points up, CAC 40 200 points up, Euro USD 260 pips down, Euro GBP 160 pips down, Euro Australian dollar 360 pips down, Euro Canadian dollar 370 pips down, Euro JPY 200 pips down, Euro Swiss franc 100 pips down, and the biggest mover, Euro New Zealand dollar 600 pips down. Today's events are from Germany. Market Services PMI for October, it's preliminary. Market Manufacturing PMI for October, again preliminary, and Market PMI Composite for October. And then from the Eurozone, we have the Market PMI Composite, Market Services PMI, and the Market Manufacturing PMI for October. All of that is preliminary news. All right, we'll move on to the UK markets now, where The FTSE 100 rose 0.4% to close at 6,376.28 for a second straight day in positive territory. The pound extended its gain against the euro as the euro was slammed by the prospect of further monetary stimulus. The pound, however, lost steam against the dollar. It had climbed above $1.55 earlier in the session after a stronger than expected UK retail sales report for September. Sales jumped 1.9% from August, outstripping expectations of a 0.4% increase in a fact set. Sterling was buying at 1.5398. The sales report bolstered the view that UK domestic demand is continuing to improve despite risks abroad. And that is all for UK. Onto the Asian and Pacific markets. Markets in Asia rallied Friday as investors welcomed the prospect of new stimulus measures in Europe, even as choppy trading in China's stock market, threatened to keep a cap on its gains this week. The Nikkei 225 ended with 474 points up yesterday. The gains in Japan put the Nikkei on track to gain 3% this week, the most of major share benchmarks in Asia. It has risen roughly 11% since its recent low on September 29th as of Thursday's close, as expectations also build for the Bank of Japan to introduce further easing. New Zealand's dollar climbed for a second day versus the US currency as demand for the nation's higher yielding assets increased. There is a 72% chance the central bank will maintain its key rate of 2.75%. The New Zealand dollar is being driven by prospects of increased liquidity. The Kiwi jumped 0.8%, heading for a fourth weekly gain. The bigger movers were the Australian dollar against the New Zealand dollar, 120 pips down, 150 range, and New Zealand dollar against Japanese yen, 160 pips up, 180 range. Last sector for today is commodities. We had the natural gas storage change report, which showed a decline in natural gas storage by 9 billion less than expected at 81 billion British thermal units for the week ending October 16th. Prices of gas started to escalate after the data. Gold had a range of $9, trading at 1,168 now. Silver had a range of 25 cents at 15.87 now. Crude oil had $1.20 range at 45.48 now. And natural gas is trading at 2.33 at the moment with a range of 8 cents. Thank you everybody for the attention. This was today's European Session Outlook. My name is Alex. I will see you next time. Goodbye.